And the elephant in the room is solar. Solar has just grown incredibly quickly. Um, by 2027, the International Energy Agency is expecting solar to become the world's largest source of electricity, of power worldwide. And so solar is growing by leaps and bounds. In 2020, from 2022 to 2023, solar installations grew by 64%. That has now made solar the single largest industrial user of silver.
Hi, everyone. It's Andrew. Today, we're going to be speaking with Peter Krauth, who is silverstockinvestor.com. You can check him out there. He's the silver guy right now. Also, author of The Great Silver Bull, a great book. I gave it a read last year, actually. He wrote it in 2022. So talk about great timing, right in the middle of precious metals starting to go. But silver was looking very attractive. And of course, now we're seeing, silver pushing $30. So we want to talk all things silver with Peter, but also look at some of this Mexican mining laws that had changed that hurt, especially explorers and a lot of Canadian companies that were down in Mexico, but also how that might mean a big opportunity for those that are looking at why mining is so critical towards this energy change with solar power, but also, maybe make a few bucks. So let's join Peter right now. So good morning, Peter. It's great to have you on here. You're the only silver newsletter, and I guess the first question is, a couple years ago that would have been a bit more bold. Right now, it looks like a great decision, and really, you're the silver guy. I mean, as far as I can tell, I know there's another newsletter writer in the U.S., but you've grabbed it by the horns, and you must be loving it right now with silver at just over $31.
Yeah, I sure am. I mean, like you said, grabbed it by the horns, grabbed the silver bull, the great silver bull by the horns.
There we go.
I decided that actually was prompting by a former colleague, but I decided, to go full in and not just the newsletter, but write a book about it. I just felt that silver was a really, really compelling opportunity, and that it was what I felt was a generational opportunity. And I'm just really happy to see this thesis really in a way start to play out. To think that prior to COVID, silver was bouncing around in the sort of a 16-ish dollar range. It then corrected to 12 as COVID hit, and then just blasted higher to 30. And then we've had this ceiling of 30 ever since sort of August of 2020. And then we've been in a range from about 22 to 28 ever since then. And now in the last few weeks and months, we've broken out in a really clear way above 30. We've been over 32 in the last few days. And I think, it's going to go higher from here. I think this 30 is going to start to become a new floor for silver. But, to be fair, I also think that if you look at a chart, this is like a textbook hockey stick. And I do think that we are going to have some rationalization of this breakout. It's probably going to come back down a little bit, digest these gains. And a lot of people who are very, very late to the party, chasing this at the $28, $30 level, we're probably going to see somewhere around that being retested, maybe even slightly lower. But I don't think we're going much below that anymore. And any pullback from here to me is definitely opportunity.
Perfect. So just run me through, so if no one has any idea, I mean, obviously our subscribers adhere to mining and they love the precious metal sector. If they don't know what your thesis is, what would you say, even if say 4 or 5 years ago, what was the thesis to go, what's happening? What's the main mover here and why silver?
So silver has become more and more of an industrial metal. It's always been very unique, in fact, in terms of metals, period, because you've got gold that is going, you could say has some industrial applications, but it's an expensive metal. It's very good in many industrial applications, but just too expensive. So really, only about 10% of gold ends up going into industry, and about 90% is some form of, either savings, bars, coins. It's going to be a reserve asset for central banks. and then you have some basically jewelry applications. There's not a whole lot else. So silver is very different. It's about half monetary and half industrial. And when I say monetary, I say half monetary, and I include things like silverware and silver jewelry in there, and then silver investment, and that makes up about 50%. In the last, say, 10 years or so, that 50% has actually been declining, and we're getting closer to more like 40% monetary applications and 60% industrial. And the elephant in the room is solar. Solar has just grown incredibly quickly. By 2027, the International Energy Agency is expecting solar to become the world's largest source of electricity, of power worldwide. And so solar is growing by leaps and bounds. In 2020, from 2022 to 2023, solar installations grew by 64%. That has now made solar the single largest industrial user of silver. It now represents, just solar alone represents about 20% of the entire silver market. So you cannot look at silver and not pay attention to what solar is happening. You're going to miss the boat completely. And as I've seen silver manufacturing capacity and installations grow and grow and grow over the last decade, I just felt that, here's kind of how I look at it. I want to boil it down. And I say that industrial demand for silver provides what I consider a rising floor under the silver price. And then it's going to be the investment demand that comes in waves. And sometimes you're going to have this FOMO, this fear of missing out, that will kick in. And that'll be sort of the juice that'll, create these spikes in the silver price. Those spikes will happen, and you'll get, these pullbacks. But you're going to get this floor where the price will continue to rise, and that is all from industrial demand, because that industrial demand, and especially as we move into the green transition, move through that transition, a lot of that's mandated. I'm not saying that you can't have governments sort of backpedaling on that to some extent, but there's just such a worldwide push for it that I see a rising floor. That demand is going to be there. It's going to be consistent. It's going to continue rising. And then I can go into all sorts of things that have to do with technologies and silver panels, solar panels that I haven't even talked about yet. So, I mean, I've been talking a lot.
No, this is, listen, we wanted you on because you're the silver guy. And I mean, people kind of think it is the other brother to gold, and it's not the case. I would say there's a strong argument to be made that the risk-adjusted return, so if you take into the risk, you get to play two different angles. Kind of what you're saying. You have the industrial, there's a big industrial use, but you also get to play this, this monetary system is, we're printing money, this is not great. And also, if I don't have a ton of money, it's nicer to buy silver and have those bars, and you go, I've got a little bundle of them. It's harder to have a bundle of the gold bars.
Well, exactly. And so that's a great point. And that's what I talk about in the book, this whole fear of missing out, and there's specific drivers for silver, and that's one of them. And when you see gold at 24, eventually, my view, gold is going to at least 5,000. I think that's reasonable. We're halfway there. I don't feel like that's a stretch. It would have felt like a stretch a few years ago, but it certainly doesn't anymore. But I've been calling for 5,000 since about 10 or 15 years. So I think absolutely we're going there. And when you see gold start to go through 2,500 and eventually 3,000, you're going to get these psychological levels are going to drive a lot of FOMO, and people are going to look at gold. They're going to say, yeah, I get it. People are buying $100 to $200 million worth at Costco alone every month. That's $2.4 billion a year just from Costco. Central banks in the last 2 years represent a quarter of the gold market. No wonder gold is way up. And so when you get the generalist investors start to really pay attention and look at gold and say, oh my goodness, gold is 2,500, gold is 3,000. What am I getting for $3,000? Not much, just an ounce, right? What are my alternatives? And then they start looking at silver, and that's why silver moves a bit later, but then it moves more. And we've seen it time and time again. It's almost without exception. When we get into a true gold bull market, silver outpaces gold. It runs more, it runs later, but it runs more, and it actually outperforms gold when when you look at start to finish in a given bull market. So these things will drive silver and drive silver even higher. And if so, a couple of other comments. One, if you look back at industrial, which we were touching on before, as industrial has become more like 60% of the silver market, if you think about it, if including jewelry and silverware, if investment is now only 40%, because it's a smaller portion, when investment starts to kick in a real way, it could have even more leverage because so much more silver gets consumed, and consumed in a way that's where you're not getting back that silver, because the amounts most of the time are small enough that ends up in landfill. So you're not getting that silver back. That's not the case with gold. Most of the gold we've mined is still around. That's not the case with silver. So if a lot of it's getting consumed and not recycled anymore, then there's less and less silver. That's what's considered above ground silver. And that's another thing that I can talk about.
Yes.
That you've got it becoming the investment part is becoming a smaller portion, and when the FOMO aspect of it kicks in, then you get potentially even higher leverage, so maybe even bigger spikes than we've seen historically. So that's one part of it. If you look at the solar panels, one of the things that I haven't mentioned is that the technology is changing quickly. We are on the established technology, something called PERC. It's been around for probably about 5 to 10 years. The newer technologies are called TOPCon. These are acronyms. They're called TOPCon and HJT. TOPCon is already being forecast that by the end of this year, it will have become 50% of all newly manufactured solar panels will be TOPCon. So what you need to know about TOPCon is that it will take up to 50% more silver per solar panel to produce a TOPCon solar panel. And so the reason that you would produce a solar panel with TOPCon technology, even though it uses more silver, is because the energy output is higher. So it justifies the higher silver content. So not only are we producing more and more solar panels, we're producing more and more solar panels with more and more silver content per panel. Therefore, I see the industrial use of silver just growing even more to represent an even higher portion of the silver market. So, again, the investment portion becomes a smaller part, and when it starts to kick in, because people see gold and they want, to be part of this market, and then they turn their attention to silver, I think those spikes will just become more and more volatile. And the upside is going to be something to behold.
It's really interesting to see something that's a wealth, like stable wealth, that can spike like this, and it can.
That's right.
I always like to harken back to more of the other side of the market, because we kind of sometimes live in a bubble. We focus on mining and precious metals, but you look at, say, JP Morgan, they've called for a 2,500 price target. I think they're probably going to change that, but Goldman just changed theirs to 2,700 gold. Now, they're not experts in this sector by any stretch of the imagination, but for me, like a firm like those types of firms to call for that type of price action, that doesn't make the 5,000 that far off, to be perfectly honest. Which we'd seen for years. Like I say, for 10 years, people come out and say, gold should be this. Here's the case for gold should be that, which is not wrong. It's correct. It should be. And we won't go into that whole rigmarole. There's lots of people going to the manipulations of the market and everything else. But it looks like now there's a reality sinking in that regardless of policy, regardless of who wins whatever election, there's going to be, as far as the economy is concerned, a bit of time to learn some lessons, and some pain coming in that kind of direction. It's either going to be more printing money, which it makes the case for silver, or it's going to be, we have to really just tighten in and really drive this down and make life a bit more challenging, which is not going to be a good thing for whoever decides to go that route. But that also still makes case for, why would I want to be in US dollars? Why do I want to own their debt? I don't. I want to own something that's a physical asset. and your one's take on real estate is one thing, but to be perfectly honest, silver's pretty mobile. I can have it in a bullion sitting in a storage. I can ship that storage around. If I don't actually want physical, I can buy the ETF if I really just want a number or a derivative kind of variation on it. So more and more people are looking at this, and that, I think, and we're only seeing a fraction of it. We've seen this before. Maybe you can run us through. It's whenever silver did spike, but now what was that? That was probably 10, 12 years, no more than that, actually.
Right.
It
Yeah,
went, and
absolutely.
it just went parabolic.
Yeah, exactly. That would have been April of 2011. I remember that
Yes.
very clearly.
There you go.
And it spiked. It spiked to $49. That was the second time that it was very, very close to 50. The first time having been in 1980. And so, if you look at inflation adjusted prices, silver should be probably north of about 160, 170 based on the 19, and that's just government inflation adjustments.
Yeah.
If you look at the 1980 high of $50. So we're a long way off from that. Silver is the only major metal, if you include all the base metals, all the precious metals, including the platinum group metals, that is still below its 1980 high. It's the only metal that's still below its 1980 high.
Very
So
interesting.
yeah, it is very interesting. Now, one of the things that that I meant to say earlier, hadn't touched on, was, I've been getting in the last couple of years, and I think rightly so, people have been asking, Peter, if there's such a bullish case for silver, why has the silver price stayed so looked like it's stayed capped, at this 28, at this $30 level? How do you explain that? So I started digging. I said, I completely agreed with them, and I had been thinking the same thing myself. And I said, there has to be an explanation for this. Not that, we'll ever be 100% sure. The markets are like that, but I could not help but think that if the price, despite, we've now with 2023, 2024, we're going to be in our fourth year of major structural deficit in the silver market. So we're talking about anywhere around 200 million ounces deficit per year. That's a 20% deficit on the 1 billion ounces of mine. So silver supply comes from mining about 85% and about 15% from recycling. So that's about 1 billion ounces a year. And we're looking at a structural deficit of about 200 million ounces. So in the last 4 years, we're at over probably 500-600 million ounces. If you accumulate those 3 or 4 years, that's half of an entire year's supply of silver has just not been available to meet demand. And yet, these consumers, especially I think the industrial consumers, are getting their silver somewhere. So I started looking at what are big supplies of silver that they could be tapping. And for me, there are two obvious ones. There are the futures markets that hold physical silver, and then you have the ETFs that hold physical silver. Now, the big futures markets are the COMEX, you've got the LBMA London, and then you have Shanghai. And we're talking about probably, I'm going to say probably around a couple billion ounces between them. And if you look at the ETFs, you're looking at least several 100 million ounces. Now, what's interesting is that I was able to dig up charts that go back a few years in all 4 of these categories. So the three major futures exchanges, and then silver ETFs globally. And interestingly enough, all 4 charts show that we are down about 40%, what I call secondary inventories. So these inventories of silver that, let's say, up until about 4 years ago, when there was, so you've got mining and recycling, and whatever doesn't get consumed ends up going somewhere, goes into storage, and usually goes to these futures exchanges, goes to private storage. To be fair, there's also private storage, which I haven't talked about. So people have their own hoards. You could have, for whatever reason, sovereign groups, or high net worth individuals, anyone who can just sit on a ton of silver if they feel like it. So, but besides that, you've got the futures exchanges and the ETFs. Well, sure enough, the 3 futures exchanges and globally the silver ETFs are down about 40% supplies or inventories in the last 4 years. And if you look at, so there's something on the futures exchanges called deliverable silver. So that's what's actually available for delivery. It's not just whatever silver sits on the exchange. And the deliverable silver, the registered silver, is down 70%.
Oh,
Right. So my thesis is that many of the large industrial silver consumers have been buying long futures contracts, have been buying silver ETFs, and then when the futures contracts mature, they'll stand for delivery. They'll just say, thank you very much. I have,
yep.
20, 30, 50 million ounces that I've contracted for. I'd like delivery. Here's where I want it delivered. They've been buying silver ETFs and doing the same thing. I own X amount of units. I'm entitled to delivery. This is where I want it delivered. And they've been taking the physical silver that way. And that, by the way, and I could go on and on about this, but
Yeah.
the largest silver ETF is SLV. It was started in 2006. It has about $11.5 billion market cap. It's no different. It's down about 40% in the last 4 years. But what's interesting is that shares outstanding. So there's shares outstanding, which is a bit of an indicator of sentiment. So although the silver price for the last, say, 4 years has had a bit of a cap, so let's just say it's $28 or so roughly. The number of outstanding shares of the SLV ETF has been falling. What has also been falling is the silver ounces held by that ETF, which indicates that someone is buying those ounces and taking delivery.
Yeah.
So there's no appetite to buy the fund. And some who own the fund, the units, are saying, I want to take physical delivery from those units. So if you look at, since the SLV ETF was created back in 2006, there has not been a sustained period of falling silver inventories at the SLV ETF. There was, during the financial crisis, 2008, 2009, you had the silver price corrected considerably. During that period, silver ounces held in SLV went up. So people were buying silver, probably as a chaos hedge.
Yeah.
Then you had a big correction in 2011 after silver peaked at $49 into about 2013, 2014. You had a big drop in the silver price. The silver ounces held at SLV actually moved sideways. They did not drop during that period. And now during a period of 4 years, when you have a stable, let's say, a stable silver price, you've seen the silver ounces held at SLV actually drop. So again, there's no proof, but it certainly looks like a smoking gun. Big consumer buying these contracts, these silver ETFs, and they're taking physical delivery. So that for me,
I like it.
I mean, I think that's very, very, very bullish for silver prices.
Yes.
And I think that the market's catching on. There was an interesting report that I got my hands on about a month or so ago. It was TD who had put this out, and they were basically saying essentially the same thing, the same conclusion I had come to. And interestingly enough, my conclusion was that we had maybe 12 to 14 months of this before someone's going to scream because they will not get their silver. They're going to run out of silver.
Yeah.
And they felt the exact same way. 12 to 24 months was about the limit where this could go on for, and then game is over.
It's a very, if one was pretty clever, had a fund, was an actual solar panel maker, or had designs on being one a couple years ago, what a great way of being able to store up supply, lock it in and be like, yeah, we'll take delivery. Thanks a lot.
Exactly.
Because it leaves then the only other option then becomes, okay, we have to go to the miners now. So what are your thoughts that we see this with the battery makers? Okay, Ford comes in and says, we'll give you 100 million as an MOU or whatever for XYZ for this amount of lithium or whatever. That's great. We're seeing end users coming to mining to some degree. I think we're going to see a lot more of it. Do you see that for silver as well? Is that not only the silver panel makers, but maybe some funds that specialize in that saying, okay, guess what? We're going to go to actual producers. And then when we go to them, we'll actually have to go to exploration companies and go, we need to find some of these on the promise of getting good. All right, but walk me through that.
So there are, and there have been for a long time, what we call offtake agreements, where you've got the large silver consumers. They will go to silver producers, and they will basically contract with them and say, I will take X% of your output, so many ounces a year. And today for sure they're happy to pay spot price, whatever the price is will be.
Yeah.
They'll just be glad to take it at that price, so that at least they lock in and they're sure to get the silver that they need. And so an interesting anecdote on that same point is that one of the larger silver producers, um, one who produces not in North America, let's leave it at that, um, has said that they sell about half their output to the West and the other half to China. Well, the Chinese consumers are coming to them and they're saying, we really, really, really want our silver.
Mm.
We are willing to pay you 2 weeks in advance of delivery, and we're willing to pay you up to $3 to $4 above spot in order to get our silver.
Wow.
So that's very telling.
Yes.
Absolutely very telling. So that tells you just how tight the market is, how
Yes.
badly they need and want that silver. And so I agree with you completely. First of all, the offtake agreements are out there. Many silver producers, even smaller ones, have offtake agreements. So a lot of their production is spoken for, but it's spoken for mostly at spot price. So there's that. Then I believe what we're going to get, and when we start to see, I have not really seen signs of it yet, but when we start to see those large silver consumers go to sort of near-term production or development stories that may be, 12 months, a couple of years away from production, and start to invest in those companies and say, I'm prepared to, give you 10, 20, 30, 40 million dollars to make sure that your project comes to production. And then at that point, be able to lock in some offtake from that production. That is going to be a really interesting turning point. And then, as you say, as that plays out, then you're going to start to see potentially some going to more of the exploration type stories. That's going to be a clear sign that the market is just, on the edge, extremely tight. It already is, but that will just sort of push it over the edge. And I think that, that's going to just sort of feed the mania at that point. It's just, it's interesting. You've got companies like, say, First Majestic, for example, that has just brought into production its own silver mint. Their idea is that they want to capture a lot of the silver premium that you pay when you buy physical silver in the form of bars and coins. And they feel, why should we sell our silver at spot when there is that premium to be captured? So their goal is ultimately to ideally move all their silver through the mint. And they feel, why not capture the premium for all of our production? So I don't blame them. That's
Yeah.
a fantastic route to go. If you can do it, if you can set it up. And then you've got a few producers like Silvercrest, for example, that is sitting on silver bullion. They feel, we have options. If we're generating cash, we have to make decisions about our cash. If we sit on cash, what happens to cash? If we don't have good projects to, recycle that cash into, almost any project, or I could say pretty, confidently, any project will have risk. So where's the least risk where we're doing the right thing for our shareholders? Well, Silvercrest has decided that at least some of that cash deserves to go back into or to sit in silver that they produce and to just accumulate that silver. If you think about it, that silver is then, other than the obvious risks, is now has no production risks, no exploration risk, no development risk, and you have a shelter against inflation. You have this hedge against inflation by being in the physical silver. So I think those are fantastic options if a company is able and willing to do it. I talk about in the book. It's funny that I'm starting to hear these things, but I talk about in the book how one point you had Tesla, for example, and a couple of other companies were buying into Bitcoin. They felt that it was a good inflation hedge. And to be fair to them, it has absolutely been a very good inflation hedge. And then at one point, you had Tesla, and there was another company, I think it was Palantir, who decided they were going to buy a bunch of gold and keep that on their balance sheet. And Tesla even modified their investment policies so that they would allow themselves, and they say quite specifically, to have the ability to go out and buy gold ETFs, these kinds of investments. And in the book, I talk about something that occurred to me, which was that this would have been, I think, around early 2021. If you look at the FANG stock, so I don't know if people even remember that. It's not that long ago, but
Yeah.
these things, we go through phases and forget. But anyways, the FANG stocks were the sort of, the 4 or 5 largest tech stocks at the time. And I thought, okay, here's an interesting idea. Why don't I go and look at the balance sheets of all of these tech stocks? Well, I added up the cash on the 5 biggest tech stocks at the time. So we're talking about Facebook, Apple, we had Netflix, Google, and I'm missing one. So we were talking about $500 billion in cash, $500 billion of cash amongst just the 5 largest tech stocks. And I remember thinking to myself, wow, inflation is taking off. We were, when I continued doing these calculations, we were late 2021. I was still working on the book and finishing it up. And we went eventually up to, and I remember in sort of mid 2022, we were at something like 7, 8, 9% inflation. I remember thinking, shareholders are going to be holding management's feet to the fire, and they're going to be saying, what are you doing sitting on all this cash? You have alternatives. It doesn't make sense for you to sit on so much cash. That cash is losing value. You need to make some wise decisions about what you're doing with that cash. That's losing buying power at a rate of 5, 6, 7% a year. That's not fair to us. You need to do something about it. And then, sure enough, you had, and unfortunately, it got reversed. But in the state of Idaho, you had someone that I think was one of the senators brought a bill to be voted on, which would have allowed the Treasury of Idaho to have options other than sitting in treasuries, for example, because treasuries were losing value, and it was unfair to the residents of Idaho who paid taxes there to see, the buildup of cash that the Treasury sat on lose purchasing power because their investment policies only allowed them to sit in so-called safe assets, which were things like treasuries, and they should have the ability to buy gold and silver, for example. And unfortunately, I heard not long ago that got struck down, and I'm sure that's going to be revisited. It's only fair. You've got people waking up to these realities, and these are the kinds of things that are becoming more and more front news for people everywhere. They're really realizing that it's important to have and protect purchasing power. The precious metals have been the place to be forever. That will not change. I think we're in an inflationary decade at least.
Yeah.
And so it makes perfect sense to have some exposure.
It's interesting too. I think the farther and stronger we see a government pushback from disallowing a pension fund, a state fund, to allow them to buy anything as an inflationary bet. So anything that would be a very telling sign, because we see even like this week, I was reading $76 billion of US debt. The Chinese were like, no, we don't want it anymore.
Exactly.
So they don't want, they're done buying. They were the biggest buyer. Part of that is BRICS. Part of that is obviously there's lots of tension. But it will be interesting to see when you get that pushback saying, hey, listen, we don't want to have to sit in cash. We'd like something else. If the pushback is very strong, then as a retail investor, you should be piling in.
Absolutely.
Yeah.
I mean, you're right. All these signs are out there. People just need to realize. And I think that was one of the reasons that I decided to write the book. I thought, I've got all these things that I've read about, and that I've researched, and that I've analyzed, and that I've written about. And I thought, I need to coalesce and bring all of this into one place so that's why I spend, the first the book is in 5 sections, and the first section really is all about macro, and it talks about, history, the history of money, silver's role in that history, and things that are driving inflation, and what is happening with silver and with money, and why people need to pay attention to that. And it's a lot of chapters, but my chapters are very, very short, and so I kind of, it's a little bit of cheating. I'm let the reader kind of feel good about, hey, I read a chapter today. It may only be a couple of pages, but I got this concept, and that was the idea. Make it easy, make it readable, not academic, but bring all these concepts to people so they could really see the whole opportunity in one place and understand what I consider silver to be a generational opportunity. It really, I believe, it really truly is. It belongs in everyone's portfolio. It's a matter of degree.
Yes, and I've read the book. It is a great book, and it was timely when it was written. And now, if people think, oh, well, have I missed the boat? No, you haven't missed the boat in any way, shape, or form. We're just into it. Like, we're into like the third inning, maybe, if I'm using analogies, maybe not even third. But this, you can get the book, and you get to read all of it and get all of the insights right here. And of course, you can go to your website as well, silverstockinvestor.com, where you post as well. But the book, right off the bat, if you want to get to know like Peter, never mind all the videos that are out there on YouTube, this would be a great place to start, and do it in a hurry, because this is just starting. I mean, that's a good thing, but the sooner people can learn and get familiar with this, the better, because it's going to give them some options to take some control back in their own lives, in their own accounts, and set themselves up, because there is a lot of chaos, regardless of what happens politically on any sides, socially, financially. People are starting to wake up that there's a lot of issues. We've printed a lot of money everywhere in the West. There's a big energy transition going on, which would require, I don't even want to get into how much infrastructure in trillions that's going to need to be that some of it is being applied through Biden's bill. I would have hoped a lot more, but at least there's a start that's happening. But before going too much of the weeds on that, let's segue a bit, because you talked about First Majestic, you talked about a couple other companies. We know that, yes, you could buy physical gold or you could buy an ETF. There's a case for both, and it's great that there's both. You can hedge very quickly and very fast with the ETF if you so choose. But physical always has a strong case. But you're probably gonna have to pay a bit of a premium for it. Even today, if you run out there and go to any of the bullion dealers, it's not as easy as it was 5 years ago. Just go, boom, let me just go buy. You're not gonna get spot. So don't be disappointed.
That's true. That's very true. Absolutely.
So let's segue into like the equity portion, because that's, someone might say, listen, this has been an incredible run just on the silver side, but that's just like wealth. Like, whenever I talked to family offices years ago about looking at gold and silver, it was like in the T-bill account. Like, that's the world. That's like, why are you sitting in cash when you can sit in this? It's not glamorous. It's not sexy. It's not fun. They were all into like the weed kind of stuff at that time. But the case was, it doesn't have to be. Like, this could just sit there, but you're going to get a way better than what you're getting in any cash. So that was true then. It's still true today. But if you if you did that, just that alone, that's a great step forward. But if you wanted to get that kind of, what do you call it?
Kicker.
Kicker, like the exponential or asymmetric possibility.
Leverage. Yep.
Let's talk about mining, and specifically because Mexico, I mean, that's silver and Mexico go hand in hand. Of course,
Absolutely.
There's lots of gold and copper, but silver, really. There was a mining law that came into effect, and I want to get your thoughts on that, because we cover and follow a lot of silver companies, and a lot of companies in Mexico. It's an excellent place to mine, and this did take people back quite a bit. Is it ALMO? Is that the acronym for the president?
AMLO.
AMLO. Yeah. Came in and stirred things up.
That's right.
So let's just start with the beginning of what happened there, and maybe kind of give us your thoughts as to what happened with some of the producers and exploration companies.
Yeah. So the quick summary on what happened in Mexico is that there's a mining law reform. What has happened, and what let's say we do know for a fact, is that that what it's going to do is going to make technical conditions, more strict. Mine concessions will be more difficult to get, and it's going to be more difficult sort of on the finance, environmental, social obligations, all of these things. So that's going to mostly affect exploration. Now, what there's been talk about, and yet that has, nothing's actually happened, but it's been talk. And that was Obrador, AMLO, who has basically said, we're not going to pit any more, we're not going to permit any more open mines. And so, but he's on his way out, and that's being challenged. When they tried to pass that, they did it in a very, very, let's say, unfair way.
Yeah, I
At the
imagine like
11th.
it's the cigar smoking in the basement. They're all colluding.
Oh yeah,
Yeah.
that's right. It was at the 11th hour. This is all being challenged as being unconstitutional. He's on his way out anyway. There's going to be an election next month, so it's going to take a while for this to play out. I'm not saying that there will not be any risks to companies that want to or that intend to mine in an open pit manner. So we need to let that, basically, it's going to take some time, as I say, to play out for us to really have true answers on that, on the outcome with that. Now, that being said, as you said, also, Mexico is important, and basically silver and Mexico going hand in hand. Mexico is the world's largest producer. If I have this right, it's about 170 million ounces a year, which is about 17% of the entire, entire silver supply. It's more than 20% of all the mined silver every year comes out of Mexico alone. You've got countries like China and Peru who are second place, roughly, hand in hand, second place, these two, and they're about half or less than half of Mexico. So really it is the leader in silver mining. Now, of course, when you have these kinds of things, this talk happening in terms of what's, pressure on the mining space in Mexico, that puts an overhang on the mining companies, whether they are open pit or not, and in fact, whether they even are already permitted or not. I think that it's unfortunate, but if you know the stage your company's at, if you know their how far advanced they are in permitting and so on, that will create opportunity for you, because that overhang will be there unfairly. And that's the case for many companies. Many of them have mines that are fully permitted, that are perhaps in operation. Others have mines that are not in operation. But the fact that they're fully permitted, these are mines that may have operated, 10, 15 years ago, were put on care and maintenance because silver prices had gone down. Now probably can be brought back into production in a very economic way, especially at $30 silver. And so they have no permitting risk. They still have all of their permits. They may not be operating right now, but as I say, there is no permit risk. So, but nonetheless, because of the news, there's overhang. And so that depresses their share prices. So as I say, there is certainly opportunity in that space. So, there are companies that I have in the portfolio that have, despite that, have performed exceedingly well in the last several months. First Majestic, I talked about earlier, is up 77% since the end of February. This company produces 20 million ounces of silver equivalent per year. This is a huge silver producer. They have 3 producing mines. They have a 4th that is the 3 mines that produce are all in Mexico. They have a 4th that they've had some operational issues with. That's a gold mine in Nevada called Jarrett Canyon. That one is on hold right now. It's being reevaluated. And they have First Mint, which is their newly up and running mint that they use to run some of their production through and capture a lot of the premium that you pay when you buy physical silver. There's a company called Sierra Madre, which is up 80% in the last, say, 3 months or so. They have a mine that used to be Silver Majestics called La Guitarra. They're bringing it back into production. a guy who's their chief operating officer by the name Greg Liller. Actually, I mean, this is a dream scenario because he used to operate the mine for First Majestic years ago, before Sierra Madre bought it from First Majestic. Now, First Majestic owns shares in Sierra Madre and recently loaned $5 million to Sierra Madre to help them bring this mine back into production. So again, this is all permitted. We could see, this mine come into production perhaps in the next few months, as early as sometime in Q2, maybe gets pushed into early Q3. So that's really something to watch when a mine comes into production. You can often get a re-rate in a stock. So on top of all of that, Sierra Madre has exploration plays, one in particular called Tepic, also in Mexico, not far outside of, I believe it's Mazatlan. 10 million ounces of silver equivalent. It's not a huge deposit, but we're talking over 100 ounces 100 grams per ton silver, plus some gold. So really a nice potential exploration play. Then you've got Discovery Silver. Now, Discovery Silver is quite literally the world's largest undeveloped silver project, a deposit, I should say. They have over 1 billion ounces of silver equivalent in the ground. I believe about half of that is silver. The other half is mostly zinc and lead.
Okay.
Now, this one would be an open pit.
Yeah.
Something to keep in mind. Their project is in the state of Chihuahua. Chihuahua is a big silver producing state. And what I have been told is that despite what might happen at the federal level in Mexico, the state governors have a lot of say over what goes on within their state. And Chihuahua being a very big mining state with a lot of jobs depending on mining, I could see a lot of pushback coming from voters from Chihuahua State on banning open pit, for example. So that again is one to watch, very, very much undervalued. And then finally, my fourth idea that I really like, added this about, I'm going to say about probably about 2.5 months ago. About 2 months ago, and mid-March, added this to the portfolio. We're up about 40% or 45% already. Just tremendous, but not too late if anybody's still interested. So Vizsla.
Yes, yeah.
Actually has a new entire silver district. It's called Panuco. It is what they feel is an analog to First Majestic's large mine San Dimas. It's not all that far off, a few hundred kilometers away. Vizsla has plus 300 million silver equivalent ounces, and they've been growing their land holdings. It's a massive district. This would be mined underground, so they feel they do not have this risk with potential open pit mining being banned. So those are 4 great ideas, I think, all Mexico plays that your viewers can sink their teeth into and do some research. But the book is an overall view of the silver opportunity, and so I kind of look at it like that. I tell people that if you want to get a handle, an overview of silver and the opportunity and how you can invest in silver and how you can build your own silver investment portfolio, the book is there for that. If you want, at that point, some guidance on investing in silver and more of a real-time feed of news and happenings in the silver space, that's what the newsletter is for, Silver Stock Investor. And so, I encourage people, if they want to get involved, have a look, go to the website, dig into it, to watch some videos, and consider the newsletter, because that's the best way to get some guidance in silver and building a portfolio.
Yes, so I think that seeing that uptick in those stocks is absolutely fantastic with just the price of silver alone. Do you think that do you think people, especially 3-5 months ago, we're a bit worried because you see sometimes news comes out, and I kind of liken this to with Pebble in Alaska. Some companies that are up in Alaska just had a sudden drop in price because people just said, as an exploration play, I'm out. Alaska's not up for doing business. Do you think that a lot of people, just as a gut reaction, would have exited, go, oh, there's issues in Mexico, I'm pulling out? Whereas, okay, that's a fine reaction. But and of course, nothing will be done before this election that's coming up in 2 weeks or so in Mexico. But there is a strong suggestion that the Supreme Court's going to overrule all of these things. There could be a strong argument that if that works out the way that kind of people are hoping and thinking, there could be a re-rating for a lot of companies on top of the silver price that's happening.
That's right. I mean, that's a great point. I think that is potentially in the cards. If we get clarity and we get the government to back off, and there was an interesting point made. I was watching actually a webinar where you had some expert opinion on, I'm talking about legal opinion on what's going on in Mexico with mining. And one of the comments was, and this is from a Mexican lawyer who was saying, you know, we have a saying, and that is that the president's role comes with power. And what they mean by that is that it doesn't matter if you've got, let's say, someone who is a bit of a protege of the existing president, ends up being the front runner in the election, ends up winning the election, that because they've been a protege of the previous president, that they're just going to sort of toe the line and do whatever the previous president did. More than likely, if they have their own ideas of how things should be done, that they will potentially veer off of previous course and do whatever they think is the right thing to do going forward when it comes to whatever issues come up. And so what they meant by that was that do not assume that because Obrador, had it in for mining, that the new president, even if he or she is from the same party, will follow the same route. They could very well take on a new tack and say, no, this is how we're doing things going forward. And like I say, Mexico depends so much on mining. Silver is so crucial.
Yeah.
And so, and in all of the different states, have a lot to say about what goes on internally, and you can be sure that they're going to be putting pressure on whoever the new president is to allow mining to take place and to be more open to fair and proper and environmentally responsible mining. And I think that's where the key is.
I think I'd read somewhere that Canadian companies account for $8 billion in exploration spending, and 70% of foreign investment in Mexico's mining sector between 2012 to 2022. So that's still that's a pretty big number. And I scratched my head too, because I think we've been talking about the solar panels. Is someone kind of has to let these people know, like, mining's the solution to their problems. Like, if they are worried about the environment, mining's the solution. To say we're going to stop mining or we're going to make it really restrictive or more difficult, it's a head scratcher. I never understand this approach. And I can understand that if someone's left wing and they're not capitalist, okay, I get it. But let's put on like the logical hat and go, fair regulation is needed, and that's fine, that's great. But to say, we're going to nationalize the lithium. That's always scary when you hear that. And then B, we're just not doing open pit mining anymore. It sends a bad signal everywhere. That the message is very convoluted. I think is that you want this green future, you want all this, but yet you don't want to allow the biggest producer of silver to be a part of it.
Agreed. I mean, you're right. It's very contradictory, and it's cognitive dissonance at its best.
Yeah.
And at the same time, great point about solar, for example. I mean, it depends tremendously. It's absolutely silver is absolutely indispensable to solar, and Mexico has perfect weather for solar panels.
Yes.
Right. So, I mean, and they produce silver. So, I mean, it just makes so much sense to go down that route.
Yes.
So you figure there should be a better, more coordinated push to getting government to understand, hey, you're doing yourself, you're doing your environment, and you're doing your people a favor by going down this route. Allow mining, allow responsible mining, in particular for silver, because this will allow for production of solar panels, which is considered environmentally sound, and you can help you can help industry produce power using solar that is considered responsible. So, I mean, there's a way of presenting things, and I think that industry, probably mining, perhaps along with others, have to get organized and
Yeah.
bring the message. Really, that's what it comes down to.
I kind of say tongue in cheek that the Milk Board of Canada has far more power than the mining sector, which probably
Absolutely.
is actually literally true, and also
Oh yeah.
probably funded better. And it's sad
Yes,
because
it is.
it doesn't take a lot of education to let people know this entire energy shift they want to do requires mining. That's the answer. So if you treat it with that kind of respect and you fund it with that kind of respect, then everything can be done at a much higher, better scale, and at a lot. There isn't that push to the lowest common denominator. I'm going to drill
Exactly.
with the least amount of money. I'm going to do this with the least amount of money. Is that if you knew that there was a constant flow to make this happen for all these critical metals and for all these pieces of the puzzle to get together, it would take a lot of stress off of a very stressed mining sector. So we're definitely going to take a look. I mean, of course, First Majestic, fantastic company. Great to have a producer like that. It's going to, I would imagine, be affected, hopefully in a positive way, with this new election and what we see what the Supreme Court does. Vizsla Silver, of course, yes. Great name. I know them very well. I'm going to look into Discovery Silver because I wasn't aware of that
Yeah.
one. So that one I'm very excited. I'm going to take a peek at. And then I'll put my little plug in because one I really, really like, and I do like early stage, is Regency Silver. So I'm not sure if you're aware of that one, but I love that project. They had some of the top drill holes for 2023. I like Bruce Bragnola. He's done it before a number of times. Great location. And it's these kind of stories that got scared off, I think, by people, even with great results. Like you see a company that has great results, you think, why is the stock at this price? It's so frustrating.
Exactly.
But you
Yeah.
see what's happening in Mexico, you see this and that. And you know what? Sometimes that just means there's a huge opportunity staring you in the face. And
Exactly.
silver's not changing, it's not going away. Gold's not changing, it's not going away. And I think that's the thing that for people to remember, is that sometimes they hear these things and they think, oh, well, Peter was talking about it a couple years ago. I didn't act on it. I'll wait now for it to come back down. Listen, timing markets is terrible. It's awful. It's very hard to do. Like this, as far as you can tell me if I'm wrong, this has just started. We're not even really going. So the sooner you can get to speed, read his book, understand the case for silver, and specifically, the better off you're going to be, and the better chance you'll be able to pick some of the opportunities that are right for your risk threshold.
Well said. I mean, I don't have much to add.
Well, Peter, I really appreciate you helping us out here and talking to us. Peter Kraut, check out his book again, The Great Silver Bull. Grab that by the horns. It's a great read. And it's got all of those nuances. I mean, and so much more in it. We wouldn't have enough time to go over all of it, but it's not only is it going to inform you and teach you, but it's going to have a lot of those specific nuances that we touched on just a little bit. So Peter, thanks so much. I really appreciate it. And we look forward to catching up with you soon.
I'd love it. Thanks so much, Andrew. It's been a pleasure.
Take care.